All right, let's talk about gold. You've probably heard about it, seen the headlines, and maybe you're wondering how to get started trading it. Well, you're in the right place. Today, we are putting together a complete blueprint for tackling one of the most exciting and, yeah, one of the most challenging markets out there, gold, or XAU/USD. This is your guide.
So here's our game plan. First, we're going to get a feel for the arena, the world of gold trading itself. Then we'll get our hands dirty and build your technical toolkit. After that, and this is absolutely critical, we'll talk about the rules of risk. From there, we'll dive into mastering your own trading psychology. And then finally, we'll put all the pieces together into your very own blueprint for consistency. Sound good? Let's jump in.
Okay, first things first, we have to understand the playing field. Before you even look at a single chart or think about a strategy, you've got to understand what actually makes gold move. Why do so many people trade it? And what are the real risks hiding just below the surface? So, seriously, what's the big deal with gold? I mean, for thousands of years, it's been a symbol of wealth. But today, it's so much more than that. It's a major player on the global financial stage, and it attracts everyone from giant central banks all the way down to retail traders like you and me. So what is it about this shiny metal that gets so much attention?
Well, here you have it, the two sides of the coin. On one hand, gold is seen as a safe haven, It's a place to park money when inflation is high or the world gets a little crazy. And it's super liquid, so it's easy to get in and out of trades. But here's the flip side. That same popularity means it can be incredibly volatile. It doesn't pay you anything just to hold it, and its price can swing wildly because of a single political headline. It's this exact tension between being a safe asset and a risky one that creates all the trading opportunities.
All right, now that we know what we're dealing with, it's time to build out our toolkit. In this section, we're going to focus on two fundamental tools that technical traders use to read the charts and really make sense of what gold's price is doing. Our first tool is the moving average. The best way to think about it is as a noise-canceling filter for the market. If you just look at a price chart, it can look super chaotic from one minute to the next. The moving average smooths all of that out by giving you the average price over a specific period. It just gives you a much cleaner view of the real underlying trend.
And here's a really simple but powerful way to use them, the MAC crossover. You put two moving averages on your chart, a fast one that reacts quickly to recent crises and a slow one that shows the longer-term trend. When that fast line crosses up and over the slow one, it can be a signal that upward momentum is building. And when it crosses down below the slow one, it might be telling you the trend is shifting bearish. It's a clean visual signal.
Okay, tool number 2 is Fibonacci retracements. Look, markets don't just shoot up or down in a straight line, right? They move in waves. There's a big move up, then a little pullback, then the move continues. This tool helps us predict where those pullbacks might end, giving us potential spots to join the trend. Now, let's be clear, there's no magic behind these numbers. Their real power comes from one simple fact. Millions of traders all over the world are watching these exact same levels. It becomes a kind of self-fulfilling prophecy. Because so many people are looking to buy or sell at these zones, that's often where the price will react. That 61.8% level, the golden ratio, is a huge one. A lot of traders watch that as the ideal spot for a trend to turn back around. Okay, stop. Before we go any further, we need to talk about the single most important part of this entire blueprint. I'm serious. You can have the best strategy in the world, but without this, you won't last. We need to build your shield. Risk management is what keeps you in the game long enough to actually win. I want you to burn this number into your brain. 1%. This is your ironclad role. By risking only 1%, a tiny fraction of your trading account on any single trade, you make it almost impossible to blow up. Think about it. You could be wrong 10, even 15 times in a row, and you would still be in the game. Trading is a marathon, not a sprint. This rule ensures you can finish the race. And this simple little formula right here is how you do it. This is your personal risk manager. It takes all the emotion and guesswork out of how much to trade. First, you calculate your account risk. That's 1% in dollars. Then you figure out where your stop loss needs to go based on the chart. You plug those two numbers in, and it tells you exactly what your position size should be. No exceptions, no gut feelings.
And this is exactly why this is non-negotiable for gold. As we said, gold can move fast. A news announcement can send it flying. Without this shield, that volatility is a terrifying threat. But with disciplined risk management, that same volatility is just an opportunity that you are prepared to handle.
So you've got the tools, you've got the shield, but there's one last enemy you have to face, and it's the toughest one of all: yourself. Seriously, the real battle in trading is fought between your ears. Taming that inner beast is the final piece of the puzzle. And these are the big ones. We've all felt them. There's FOMO, the fear of missing out. That voice that screams at you to jump into a trade after it's already taken off. There's revenge trading, when you take a loss and immediately jump back in with a bigger size to get your money back. There's greed, which whispers that you should cancel your profit target and let it run. And then there's fear, which makes you snatch a small profit way too early on a great trade. The only way to beat these is with a concrete, predefined plan. This really says it all. You could give two traders the exact same winning strategy. The one who has mastered their emotions will make money. The other one won't. It's that simple. Your success over the long run is a direct reflection of your mental discipline. So how do you do it? You create hard and fast rules that act like circuit breakers for your emotions. A rule like stop trading after 2 straight losses prevents a bad day from becoming a catastrophic one. A rule like never ever move your stop loss further away prevents a small acceptable loss from turning into a disaster. These rules are not there to limit you. They are there to protect you from yourself when you're most vulnerable. Okay, this is it. It's time to bring everything we've talked about together. We've looked at the market, we've built the toolkit, we've crafted the shield, and we've started to tame the mind. Now we put it all together into one master plan that will guide every single trade you ever take.
Your trading plan is your business plan, and it needs to be written down. You need to define exactly what your entry signal looks like, where your exit goes, your maximum risk per trade, and your maximum loss for the day. You decide all of this when you're calm and rational before you're in the heat of the moment. And if the plan is your blueprint, then your journal is your progress report. This is how you actually get better. You don't just track your profits and losses. You track why you took the trade. What were you thinking? What were you feeling? Were you disciplined? Were you scared? This is where you become your own coach, and it's where you turn your weaknesses into your greatest strengths. And that's it. A complete blueprint for how to approach the gold market with structure, with discipline, and with a plan. It's not an easy path, but it is a clear one. You have the tools. You have the blueprint. So the only question left to ask is, what are you going to build?